do you feel that the gap where we are today at 33, and where most people are saying, well, mostly as I talk to be able to run this economically, some will get into production at 30, but they're not making much money. You want to make money, right? That's the name of the game. So do you think, how quickly do you see these markets moving? You were around for the last cycle, you saw it explode. Do you think we're in the same or similar market conditions to back then, which will allow the price to move rapidly when it does start going, or are we going to be stuck in the 30s for some time, in which case it's not going to move the dial for a lot of producers?
Well, I think, at this point, there's several opinions, of course. There are those that say, yeah, the price will move up, the spot price, maybe into the mid 30s, could stall out. We could see a new trading range kind of in the, 32 to 35 area for a while. Then the utilities would say, well, it just shows maybe there's not as big of a supply issue looming. There are others saying $40 by third quarter, $50 by the end of the year. I think what triggers particularly the term contracting is both the level and the velocity. That the price keeps moving up, then the utilities reached a conclusion that, well, this is now sending me a signal that supply is an issue in the future. And so I think we're still a little early, but I think we're more likely to see some of the utilities. Again, they started to come in the market before the COVID effect. A couple of the big U.S. utilities distributed long-term requests for proposals, one in January, one in February, but they were really capturing the true long-term market. I mean, deliveries starting, kind of 22 to 24 and going out to 28 to 30. So they were beyond the carry trade impact. And, as a couple of the market observers have said, they probably saw the best prices that may be offered under new term contracts for quite a while. But then they've kind of stepped back a bit with the COVID effects where they've, have to handle all of that. And some of it's reloads. Again, spring and fall are big reload timeframes in the U.S. And the fuel groups get involved in that. Having worked in a fuel group in the past, you go out to the reactor, you do fuel startup tests, and so that is a high priority. And, they've got a pretty full agenda right now of issues they have to get cleared. But I'm hearing that some are still in discussions with the bigger producers about long-term contracts. And again, Matt, that's one thing that, people tend not to focus on.
Well, I do want to talk about that.
I went back 15 years, and there's a certain way you have to go about.
Well, let's get on to that. I
think the market fundamentals are moving in the right direction right now.
Okay, well, let's get on to that. So let's put it in a way that people can understand. We go, right. So Cameco has got orders to fill. Cameco's not producing any of its own product at the moment, okay? It's got orders to fill. It needs to find pounds in the market, and it's been able to cobble together pounds over the last year, put together with their own output, and they're hopefully making some money there. There's not a lot of pounds out there now, but they have these contracts in place. What happens if they cannot find the pounds that they need to fill the contracts? Do they just turn around and go, sorry, can't do it, we'll have to wait till there's something in the market, or we have to wait till we get into production? Can you get it? What are the punitive terms in a contract if you don't deliver?
Well, there are, force majeure protections. Now, can you say that I don't think MacArthur would qualify, but Cigar? I mean, it was shut down due to provincial health restrictions. So that to me is if they had to trigger force majeure, they could do it there. But back on their making their deliveries, keep in mind they've got purchase agreements in place. I think they've got a couple certainly with Inkai, And as they made clear on their quarterly, they're taking a disproportionate share of that production, meaning they're taking pounds that were produced for Kazatomprom. So I think that, they've probably set up some agreements with probably maybe the Kazakhs, with others, maybe the Uzbeks right now, that you don't see in the spot market, but they are near-term purchases. So that's one thing. Wouldn't surprise me if they've gone to their customer base, and some of them they've said, hey, do you really need these pounds right now? What if we deliver them a year from now? That goes on, so it affects the delivery commitment side. They've not really suggested that, but that's what I'd be doing. And the other is loans. I mean, I think, again, Cameco is a pretty conservative company. Would I approach maybe utilities that are holding big inventories, which they don't intend to sell, but they don't need for maybe several years? And there's certainly one big region where that's applicable, and put in place contingent loans. If we need to draw down this material, can we do it under these? So I think they've probably done some things on the procurement acquisition side more than just coming into the spot market to probably ensure that they're going to meet their delivery commitments. I mean, at the end of the day, it's long-term delivery reliability is what carries the day in this industry. And even the Kazakhs have said that's where they're continuing to progress, but they want to be viewed as a long-term reliable supplier. Well, to do that, you meet your delivery commitments. So I think that's, if you look at what might Cameco be doing, I think Orano is in a somewhat similar position. People kind of don't talk about them, but in a normal year, if a MacArthur was operating and Cigar normally, they'd get about 20 million pounds out of Kazakhstan, Canada, and Niger. Now, if you based upon some assumptions, they might lose 7 or 8 million this year with MacArthur, with Cigar, with the cutbacks in Kazakhstan. And I think one of the telling issues there is when they shut down MacArthur and they borrowed 1 year's worth of production share, 5.4 million pounds, immediately from Cameco. Didn't suggest to me they had a lot of available inventory. So again, when people say there are producers buying in the market, I assume that that's both Cameco and Orano. So
that's a sort of mixture of on-market and off-market acquisitions, and in a way, it's kind of I would call it structured finance, really, because you're talking about borrowing under certain conditions with a view to either replace or pay at whatever structured finance rates you have agreed. So it's much more complicated than I think most people appreciate. The way that the product moves around the market.
Yes. No. Yeah. There's no question. And again, I just want to say I'm speculating a bit on Cameco, but I know them again as a long-time conservative company, and they want to meet their delivery commitments. So that's what I'd be doing. I'd certainly be putting the loans in place. But yeah, I think you're right. I mean, even in the spot market today, you step back and you say, well, the volume is 30 million pounds through like mid to late April. And the question, of course, is where did those pounds come from? Well, I'm being told that actually some producers are selling. There's a couple that, because of production cost structures, are not as sensitive to backing out of the market. Let's put it that way. Some of the traders have been doing a bit. But also the financial buyers, those that kind of showed up in a wave in 2018, they bought, there was speculated 10, 12, 15 million pounds. I think last year, some of them may have managed those inventories a bit, sold some off. But what I'm being told is they've been in the market selling and buying. They're acting more and more like traders. So we see what's called churn in the market, and that's kind of reflected in that 30 million pounds. So it's not really 30 million free pounds. It's probably less than that, but we've had pounds transacted more than once by some of these. So again, the market is, as you say, more complicated than it appears on the surface. But again, the financial buyers acting as traders, and it's not all of them, but it's enough to kind of get more volume in the marketplace.